Hey guys, welcome back to the another video. Till now we have learned about the liquidity, but that concept is not completed yet. We have still more parts about the liquidity to cover. But before that, there was a concept that I wanted to teach you, and after that we will have the another video of the liquidity. The thing over here is about the new concept that you are going to learn about is called the FVG, fair value gap. Is a gap that we have over here that we need to talk about and we need to understand. So what is this concept all about and what does this concept over here mean? This concept, some people also say it's considered as an imbalance, or you can say FEG. Some people say imbalance, some people say FEG. It's completely fine. The concept, both the places are same. The thing is, it's actually the three candlestick patterns that we have to follow. The first candle is over here, one. Let me change the size here. I think the size is a little bit more small. Yeah, fine. Okay. This is our second candle over here. And this thing that you see over here, it's our third candle. This is our third candle. The second thing is same over here. The similar thing is happening over here. We have the first candle over here, second candle over here, the third candle over here. Oh, sorry, the third candle over there. Now we have to follow up on these candles over here, which you have to understand how we are going to check about the fair value gap and what does it exactly mean. The fair value gap is a three candlestick pattern, the first candle, second candle, and the third candle pattern over here. The thing is about this three pattern over here. The first candle is like this. Suppose it's for the bearish market. The first candle is like this, second candle here, and the third candle here. This candle also can have a wick. But the thing is, how are we going to mark our fair value gap and what does this fair value gap actually mean? Let's first learn about how do we mark it. If you see the first candle and you see the wick of this candle over here, where is this ending? This wick is exactly ending over here. And then if you go to this one, you will see the wick of this candle also ending somewhere. That is ending over here. The gap on the second candle that you see from here to here, this gap, this is considered as a fair value gap, FVG. And this is something important to learn and important to trade about. If these wicks suppose overlap one another, suppose this wick is suppose up to here, or this wick is this wick is over here, suppose like this, then this fair value gap is not considered. This wick should not consider this wick, or the body should not consider the should not overlap the body. The wick should not overlap the wicks or the body. The thing is, there should be a pure gap in between the three candles that I showed you, like here. The pure gap. There is nothing that should be overlapping over here. The same case is over here in the bullish market. As you can observe over here, we have this thing over here which is ending over here, and we have the candle over here, wick of the candle over here, which is also ending from this point. So as you can see, there's a pure gap between them. This gap that you see, it's also considered as a fair value gap. Now you might have a question, what does this FVG actually mean and why is it so important? Why are these things actually happening? The thing is, this FVG is caused when there are only either buyers or when there are only sellers. When there is pure selling and pure buying happening. This is a huge momentum candle that happens at an instance very quickly. But the price cannot do that thing. The market cannot let it happen. It's impossible for the market to do it. There can be both the buyers and the sellers. It cannot be either one. It cannot be buyers or sellers. It cannot be only buyers. There should be buyers and sellers. So this gap that you see over here, this is considered as an imbalance. It's an imbalance which is being created over here. This is not the balanced market. If I will go to the charts over here, I will show you some examples. If you will see over here, what is happening over here? The pure selling. Can you see the pure, exact pure selling over here? This cannot happen. This pure selling need to be fixed. This pure selling need to be filled. And how is it filled? As you can see, the market tried to push up. It filled these gaps over here, and then it came down again. This is the concept of the fair value gap that you need to understand. The market cannot let this thing happen to have only the sellers over in the market. Even if you go to the 1 minute time frame, you will be able to see it would be still over there present. See, only this. Why it only came to this point? Why not here? Why not here? Why not here? Why it came to this point over here? In the 1 minute time frame, you can see we have the fair value gap over here. If I will delete it and let me mark it properly, you see this is a wick of a candle over here. Let's say like this. Let me zoom in a little bit. There's a wick of the candle over here. We have to mark it like this, and then we have to mark it up to the bottom. This wick over here. This is our point of entry. Here the price might come, mitigate, and then you can see the price will go down. Like we have the order blocks where we place the entry, the fair value gap is also the place where we look for the entries. Now, not only just one example, we have the hundreds and lots of examples for the fair value gap that is being filled. If I will show you the other examples, see, the price came over here. There's a candle from this side and up to this side. What do you see? The price came exactly over this point and then went down. Always remember, the fair value gap can be in any of the time frame. It's not a 1 minute time frame. It can be in daily, monthly, weekly, all the time frames. If you'll see, we have the gaps over here. We have the gaps from this side as well. See where the price reacted to. The place from this to this. The gap over here. In the lower time frame, the story can be a little bit different. That's completely fine. But as you can see, there's a pure buying over here that is happening. The market has to be balanced, and these things cannot happen. This area that we see over these imbalances that are being created, or these FEGs, these need to be filled at any cost by the market makers or by the retail traders, doesn't matter, but the algorithm has to fill out these spaces over here. It's a daily time frame. As you can see, the same thing is happening. Let's move to another example. As you can see, we have the 3 candle pattern that you need to know. As you can see over here, let me mark it. You see this thing, this is also kind of a candle, but it's not a full candle, maybe because of the news events or the other events that might be there. Like you can see on the 1st January, it was Monday and it was a new year, so there's no momentum in the market. Anyways, we don't have to focus on that currently. Let's say there's a fair value gap. It's coming from here and it's ending over here. This candle that you see, this is a candle, this candle and this candle. You need to remember this thing. There's no other third candle. You're not going to consider these candles. You just have to see, you see the gap over here, you have to check this candle and this candle over here. You have to mark this zone over here. And what we expect the price to come into it. The next day you can see the price is coming inside it and it went down, up or whatsoever accordingly. These imbalances are going to be very important for the market makers as well as for the retail traders. Even if you have the order block over there anywhere, it's not necessary the order block would be mitigated, but this fair value gap needs to be filled. This is a necessity in the market. Wheresoever you find it, it needs to be filled. Definitely it needs to be filled. Either today, either in 2 days, 3 days, 10 days, doesn't matter, but it needs to be filled definitely. You see over here an example. We have the breakout structure. Oh, sorry. We have the breakout structure over here. No issues in that. What do we have over here? The order block. Fine. Did the price came to this point? No. Why? It came from this area to this area. That is our fair value gap. Price came here, went down, giving us a good amount of money, and that's it. One thing you need to know about this fair value gap is it can be a very big stop loss. There's no guarantee in the stop losses and the refinements. It can be very big. Remember that. That is the thing. Now there might be some of you who might have a problems in marking this fair value gaps. It's I will make it easier for you. You just have to go to indicators. You just have to search here for fair value gap. Fair value gap. You see this Lux algo. Click on it, and it will automatically add it for you. Fair value gaps. Fair value gaps being added. Or somewhere it's not adding. No problem. It will add almost everywhere. Sometimes these things happen. Yeah, it's have added it over here. From this area you can see the price that came over here. Here also same thing. Here the price came here. This also has been marked. This also has been marked, and you can see the price came over here and then went down. Very simple and easy. But when are we going to trade these fair value gaps? Because you can find the fair value gaps almost all the places in any of the time zones. We have to figure out which time zone is the best for trading the fair value gap, which we will be discussing in the upcoming class. But before that, before we go there, there are two types again here. That is a bullish and the bearish fair value gap. The side that you see over here from which the selling takes place, like you have to sell over here. This is considered as a bearish fair value gap because we are going to sell here. It's considered as a bearish fair value gap. Same way, the bullish will be green in color over here. No, it's not showing somewhere. Wait. The market is exactly going down now, so maybe it could 1 minute. I will show you. Yeah, now as you can see it happens. It's an indicator. Sometime it happens with it. It's completely fine. So as you can see, there's a this thing over here that is a fair value gap. Price tapped in, went up. Price tried to came here back, went up. Another fair value gap here. Price came inside of this fair value gap. You can place the entry over here. Suppose let's say, yeah, sorry. Let's say we are over here. Let me mark it manually because when we will change the time frames, this will be changed. Okay. So this is my 5-minute fair value gap. Let's go to the 1-minute time frame. And you can see there's an order block over here sitting. We can place a trade and that's it. It's not necessary there would be an order block, but we have to look for the confirmations, which I have already shown you. That is the thing you need to understand. Fair value gap, price went up. Fair value gap, the price came in and went up. Because it's just a 3 candlestick formation, let's forget about this. We have the pattern, suppose market like this. We have the fair value gap from here to here exactly. Let's move to the next candle. Price came here. Let me place a buy position over here. And let me target some good points. What is the session? Yeah, it's the London mid session. Let's point out over here some good target from this point to this point. Okay, 10 pips or whatsoever. Let's move it again. And that's it. We hit the target. What else do you need? 10 pips exactly. And what was the risk to reward? Let's put that also. The risk or risk to reward risk. It's just 1.5 pips, fine. And then the reward is 10 pips exactly. Yeah, so 1:6, and that's it. For a loss of $16, you gain $100. I think it makes very pretty sense. Yeah, this buy position is because I have put a very different lot size, that's why it's coming, so forget about that. Simple. This is about the concept of the fair value gap. So this was a buy side fair value gap, and this is a sell side fair value gap. See here also the London session has kicked in, the price came to the fair value gap, went down, and it could be easily 20 pips, and that's it. From here to here it's 3 point this 9.596, 15 pips, and that's it. But how are we going to determine the target? I've already shown you. the liquidity is taken from this side, so obviously we expect the price to go up. Why I'm saying this thing, there is a reason. This is an Asian session which I have not taught you yet. What do I mean by the Asian session? Asian session consolidation, retracement, accumulation, which we will be discussing in the upcoming videos as well. So this was taken, and you can see this is also a form of a liquidity. We can think about this thing as momentum, and that's it. How are you going to place the trades over here? It's just this fair value gap over here that you saw. This is just the fair value gap that you saw. Anyways, we don't have to figure out that way. This was the only thing that you need to understand. The market is not going to let it happen. These gaps, it's impossible for the market to do these things. How can the market put the imbalances in the market? Market has to fix the balances in the entire market. The market makers, the algorithm is not going to let it happen. It cannot be like this thing. As you can see, there are the fair value gaps here, from here to here also. It's exactly a fair value gap, no doubt in that. But the thing over here that you need to yeah, obviously the indicator has not marked it, no problem. But the thing is, as you can see, it got completely washed out. It got completely washed out. It has been filled. Yeah, this thing, it has been filled. It has been filled. This fair value gap that was it was filled by this candle, this candle, these candle repeated it, filled, this filled, this filled, this filled, this is up to be filled, this is to be filled. As I told you in the earlier time, like at the start of the session, the market is going to fill it at any point of the time. This thing from here to here, filled, filled. So these are the things that you need to focus upon. That's it for this session about the fair value gap, and this is the thing which we are going to trade, how we will be placing the trade upon this thing. I will be telling you this in the upcoming classes. So that's it for this video. See you there.